I set up a real estate fund or syndication, can I start the fund and raise capital for properties I own and are currently cash flowing? How would I put my properties into the fund and have people invest into those assets?
Okay, this is a very common question when we set up somebody with a real estate fund. So you have several ways you can do this. Number one, you can literally, let's say the property is in your name, let's just keep it simple, or whatever LLC. But we set up the real estate fund for you, and the real estate fund is called Clyde Real Estate Fund LLC. So what we do is we're gonna take the property and you can transfer it, literally do a transfer into the fund. So the ownership changes from Clyde person owning the property or Clyde the personal LLC owning to the Clyde Fund LLC that actually owns it. Now that's one way. The key thing is you do it at what price? You can do it at your original cost basis, so you have no taxable gain. You're just transferring from A ownership to B ownership. So now you bought it at $1 million and now it's worth $1.5 million, but you're transferring it at $1 million. You can do that. You can transfer it at $1.1 million, let's say, because you have enough write-offs and all this, you're not going to be taxed on so much. You can also transfer it at a higher price, like at market value. So you can transfer it at $1.5 million into the fund. And if the fund doesn't have money yet, the fund will owe you $500,000. So you can do a credit and debit between you and the fund. Remember, the way I set up the funds for you are debt funds. So you can do that very easily. So you're actually just transferring all this. Why? So you can tell the investors, we have this asset. This is an asset I know, I put it into the fund. Now, if we set you up with the fund, we also disclose certain things saying conflict of interest. You can assign a property into the fund and make a fee. You can put a property into the fund to benefit the fund, but charge a management fee. You can put a property into the fund and the fund will owe you money. So long as the investors get paid what we outlined in Class A and B shares, etc. SEC is happy, attorneys are happy, investors are happy, and you as well will be happy. This is a very common way to make a lot of money. As a matter of fact, one of the best ways when we set up the real estate fund, so you have yourself here, you have the money from the investors, you have the fund, so you bought the property for $1 million, you improved it, it's worth $1.5 million, don't lose it, just sell it to the fund because it's gonna perform and now you're gonna pay the investors. When you sell it into a fund for the $1.5 million, if the fund has enough cash and you can get a loan under the fund, which is easily done, it cashes you out. You can do a 1031 exchange into something else. Or you can actually have the fund carry financing. The key thing is now you bought, improved, and sold to the fund for profit, and the fund pays the investors. Now you got your money back out, you can do it again. You can do it again. And I've had people that would buy a property and it's cash flowing at, 7%. They improve the cash flow to 10%. Then they actually want to cash out their money. So they sell it to the fund, get a new loan with investors' money, get a new, put the down payment with investors' money, get a loan, cash out their money, go do another deal, and now they are personally growing and their fund is growing and the investors' database is growing with them because they're getting paid. And then later, as you want to cash out some of these assets or roll them in a 1031 exchange, whatever, you can do that because the fund owns them and the investors get paid a debt fund return. So transfer ownership by actually literally do it at cost or transfer it at a profit. You don't want to pay taxes, you can do 1031 exchange, or you can actually do a seller carryback if there is any challenges with the 1031. And a final way you can do it is you can keep it in your name, you have your fund, and you can just say that the fund will manage the property. So when you make money, you're paying the fund. So you have expenses here, not paying any taxes, and you're getting money into the fund so the fund can pay investors. And you're telling the investors, when we write the fund for you, we say that you can buy assets, you can buy mortgage notes, you can transact tax liens. It's the widest open array of transactions in the real estate business. And it's the best way to structure a fund. Anybody set up the fund with us can attest to that. I mean, I don't know if you saw the success story of Shane Seo, who set up the fund in 11 months. He's got $6 million in assets. I mean, it transformed his life. He went and bought a beautiful Lamborghini, beautiful whatever. I'm not into that stuff, but it's good for him. But the point is, you can have the fund help you grow, help your investors grow, and keep just doing this, pledging them to your fund or doing management fees back and forth to grow.